Good evening, everyone. Welcome to the channel. Today I am going to talk about Kestra Medical Technologies, Limited, quarterly report. Do note that this is not a financial advice or a buy or sell call. All content are AI generated and is not associated with anyone. Kestra Medical Technologies offers various businesses and services through its cardiac recovery system platform. These include wearable cardioverter defibrillators, Assured WCD, for patients at risk of sudden cardiac arrest, integrated digital solutions and services for enhanced patient and provider engagement monitoring technologies to track patient health, therapeutic treatment options to improve patient outcomes, digital health and patient support services. The lack of significant changes in Kestra Medical Technologies, Limited's stock price over the past year can be attributed to several factors. The company's initial public offering, IPO, in March 2025 was followed by a period of relative stability, with minor fluctuations that stayed above the -0.05% threshold. Several events contributed to this stability. In June 2025, the appointment of Connor Hanley as an independent director to the board was announced, which is typically neutral to mildly positive news. The company also won the 2025 Top Workplaces Industry Award in July 2025, a positive recognition that could have helped mitigate minor negative pressures. In August 2025, the announcement of Cone fiscal 2026 financial results date was made, which is a typical neutral scheduling announcement. Finally, the strong Cone fiscal 2026 financial results reported on September 11, 2025, showed revenue increasing by 52% year-over-year and raised FY26 revenue guidance, leading to a positive reaction from the market. These events collectively contributed to the stock price remaining relatively stable over the past year, with no significant negative changes exceeding -0.05%. The primary drivers of revenue growth or decline for a company are multifaceted. On the growth side, commercialization of new products, market acceptance, reimbursement availability, and scaling manufacturing capabilities contribute significantly to increased revenue. Direct billing of third-party payers, increase in patient usage, improved reimbursement realization, supply chain efficiencies, and expansion into new markets also play crucial roles. On the decline side, rising costs of materials, electronics components, labor, shipping, and inflation are primary drivers of revenue decline. These external factors can have a substantial impact on a company's bottom line, making it essential for businesses to adapt and mitigate these effects through strategic planning and cost management. The company's financial performance indicates a lack of positive operating cash flow. The net cash used in operating activities for both the 3 months ended July 31, 2025, $26,274, and 2024, $17,499, is negative, signifying that the company is not generating sufficient cash from its core operations to cover its expenses. This trend suggests a potential issue with the company's financial management and may require attention to improve its operating efficiency and generate positive cash flow in the future. Management's outlook, focused on growth and efficiency, the company is optimistic about its future prospects, driven by the expected growth of its Assure system. Revenue is anticipated to increase as more patients use the product, while gross profit will rise due to improved market access and operational efficiencies. The management team plans to continue investing in research and development to expand the product portfolio. However, they also acknowledge that general and administrative expenses will increase due to growing headcount and public company costs. Despite this, existing cash reserves are expected to cover operating needs for at least 12 months, with potential additional funding required to support growth initiatives. Overall, management strategy is centered on balancing revenue growth with operational efficiency and strategic investments in sales and marketing. There are no notable acquisitions or divestitures reported in the provided financial summary. The document does not mention any significant transactions involving the purchase or sale of assets or companies by the organization. The company has a history of paying dividends, but it did not pay any in the 3 months ended July 31, 2025. Additionally, there have been no share buybacks or repurchases recorded for the company. Concerns over inventory buildup and supply chain disruption. The production of Assured WCD is threatened by potential issues in the supply chain. There are concerns about inventory buildup due to difficulties in obtaining sufficient and timely supplies of essential components needed for manufacturing. This could lead to disruptions in the production process, ultimately affecting the overall efficiency and success of the project. That concludes the financial summary for Kestra Medical Technologies, Limited. Feel free to comment below, and I will be happy to answer them when possible.